That that last ad you did for us,
Yeah.
that was good.
You liked it?
I actually did.
Yeah.
I thought that was one of the better ones for some reason.
Yeah, cool.
Yeah, so you're either getting better or that one just kind of...
Cut through.
Hopefully we're getting better.
Let me pull it up.
Getting better or that was an anomaly.
So who still needs convincing now it's in the fin? So maybe it was because of that.
Yeah. Research backed, like...
Research back, there's a science behind it now.
Yeah.
It's actually, a doctor in, architectural and well-being or, whatever his PhD is.
Yeah. Wouldn't it be funny if you just gave us feedback on our ads, and then that's our ad for next week.
Yeah.
You guys
Your
didn't
ad
prove
was
it.
shit.
Yeah.
We're gonna rant up here. Yeah.
What you got there, mate?
Oh, sorry, mate. It's just, I'm always reading this book. Yeah. I like to put this book front and centre, and I think it should just sit here
Place it right there.
from now on. Yeah, it's quite a good book. I should read it one day, mate.
Your nighttime reading, hey?
Yeah, no, it's good. It's good. It's a really good one. Have you read it?
I've sort of perused it, I would say.
Rocks, Fossils and Formations. Discoveries Through Time.
I hear the author is quite switched on.
Thomas R.H. Woolrich.
Rings a bell. Mate, we got a bit on the menu today.
Yeah, we do. That stuff. God, how good of a sport was Paul Natoli at the start there? What an absolute legend. That was Paul Natoli of Grounded Construction, if it wasn't immediately obvious from the beautiful lusset tones of his voice, giving us some guidance and feedback on our last ad.
A local hero. Go Paulie. Mate, like you said, lots happening in commodities, lots happening in markets. I'm excited. Commodities are sort of moving kind of volatilely. We've seen gold peel off and everything. And when it comes to the companies, mate, Paladin, they've made some changes at the helm. Predictive came out with the DFS, and I'm very keen to sort of dig into how the M&A dynamics play out. We've seen about a year of action, and I think we're into crunch time there now. And
They predicted the discovery. Can we predict who the buyer's going to be?
And we've got approvals in Victoria, of all places, as well as a junior in the lithium space doing a buyback. So plenty to rip through.
But first of all, this episode is made possible by none other than Mineral Mining Services.
MMS, mate.
The mining services business that just gets it done.
It doesn't matter if you're an established miner or you've got a beautiful ore body there waiting to be ripped out. MMS is the partner you can rely on to get the job done.
Mate, it doesn't even matter if you don't know the ore body is fully there yet. Their tech services team can help you on the way because the MMS team is stacked with experienced mining professionals who can add value to your operation or a deposit, waiting to be tapped.
And even better, they move super quickly. They can get creative in designing the right solution to unlock the value that is sitting in the ground for the max upside for your mining company, mate.
I've seen them do everything, JD. Your normal mining services contract, they get it done. Does it require a JV to be funded and share the risk? They get it done. Is it just a standard load and haul contract? They get it done.
Mate, I don't think we need to say any more. Get in touch with the super experienced team at MMS and get a taste of what stress-free rewards taste like.
Now, Ian Purdy has is departing Paladin. This came out in an announcement yesterday. Very curious framing of the announcement. It was worded in a way that it made you second guess. Hang on. Has Ian Purdy told the market and flagged in advance that he's leaving? Everything was about the appointment of this other guy.
Bit of a head scratcher, right? I saw some analysts sort of call it well telegraphed or words to that effect. Hadn't been sort of telegraphed so well to us, at least. And yeah, it sort of gets you thinking, given the nature of where this business is at and the evolution. So Paul Hemborough is going to step up, become managing director and CEO. Paul has been the COO since 2023. So he's got familiarity with the business, with the market. Before that, he was at Rio Tinto for a long time, as well as BHP had a good spell there. So obviously Ian Purdy's going to step down. He came into the business near the beginning of 2020 when spot uranium was breaking through $30 in that year. It was a very different business. Obviously Langer Heinrich wasn't even operational. They were talking about doing PFS work on the restart. So
Balance sheet needed tidying up. I think they sold the non-core project as well.
Yep, they sold Kayelekera within a month or so of him coming in. And yeah, there's been a fair bit, to say the least, that has happened through his tenure at the company. But like you said, the wording of this one raises a bit of an eyebrow, and it's just worth chatting about and getting into a bit more, I reckon.
Why do you find it intriguing?
For a couple of reasons, right? Like, no doubt this business is in a different position to what it was 5 years ago, but there's been a lot of good stuff, and there's also been a couple of question marks in the last year or so. So to name a couple, they had the water shortage challenges early last year.
The
Then,
controversy around that merger with Fission.
yeah,
Wow.
exactly. That took a lot longer than people suspected it might. You had, all of a sudden too much water with the weather events earlier this year. You had reconciliation, question
the
marks with the
stockpiles.
stockpiles there, class actions
Yeah.
following guidance being marked down and then guidance being pulled entirely earlier this year. So there's a few question marks on those points, but I think it's quite simple. Like a leader of a mining company steps down during ramp up, and that's just one of those checkbox items that makes you peel into it a bit more just to make sure everything's in order. It's a pretty sort of straightforward, and it's not always a cause for concern, but it's worth digging into.
Yeah. So, sometimes it can be explained away, but it's one of those things that you see happen, and maybe they're in a different phase of ramp up, like they've been ramping up for a while, but yeah, this
Because it's a restart project, it's not the mine door going through the plant just yet, so it's a bit of a different beast. But,
yeah. So tell me about the wording in the announcement.
well, I feel like there seems to be a bit of ambiguity. So taking a phrase, planned and rigorous succession process involving executive search specialists. First question mark is like you're hiring search specialists, but you made an internal hire. Now, fair enough. Maybe you just want to vet the field and make sure you've got the perfect candidate for the job. But then you sort of dig in a bit deeper, and they sort of say an interim COO process has been established within Paladin in the event that a COO transition period is required. Now, it seems to kind of contradict the planned approach that they mentioned just before.
Just the wording interim. Interim is something you kind of put in place when there's an unplanned thing that happened.
Yeah, when things happen a bit more suddenly.
Abrupt, yeah, which happens, but it kind of is contrary to the well flagged and also the planned wording that we see in the other parts of the announcement and analyst remarks since. But Purdy's not stepping away straight away. He's hanging around until mid-December. He's available. So there's a 6-month, quite a lengthy notice period in there, as opposed to leaving abruptly, which is like a more promising sign than could be the case.
Yeah, so Paul will become CEO from the beginning of September, and Purdy has said he will remain there, and that's sort of clear within the notice period, which can be activated by both himself or the company, but that would run until December, given it's a 6-month kind of period. And I think it's worth flagging now, like different CEOs suit companies at different stages, and I think it's incredibly rare to have one CEO that is the perfect person to be the one that raises the capital and does the exploration phase, discovers a project if that's the type of company, through to developing an asset, through to ramping it up, and then managing it in steady state. Like, I think that's incredibly rare, and I think it's a justified statement to say that you have different people with different skill sets that are appropriate for managing a business at different times. Added to that, I think it's incredibly rare you get the perfect time for someone to step down. Like I mean, Jake Klein recently, he's sort of stepping down at Evolution seems to be kind of textbook. It's gone too well. The gold price is ripped. It's an opportune time. He's been there 15 years. But in most cases, like you're putting fires out at one point or another. So there's always going to kind of be question marks. But I think it is pretty valid to keep in mind that different people are right for companies at different times in the company's life cycle.
I think that argument is like, surely, yeah, it's valid, but I feel like it's much more valid when you're talking about the kind of CEO who was in and around the mix in the discovery phase, early proving it up and taking it through those early development stages.
Yeah,
but,
that's a general statement.
Yeah,
right. That's not a specific comment on Paladin that I'm making there.
Yeah, and then you've got the kind of like the operator or the established operator, the guy who knows how to run a mining company. Paladin was a built mine. This is a restart project. Now, Ian Purdy had to do a lot in relation to the financing and also the operational oversight to kind of get things going in a country that's not Australia, obviously, all those sorts of things. He wasn't the exploration guy. At the time he was appointed in 2020, was the view that he would run a uranium mining company. Yes, it probably was. So
Yeah, the person to do the capital raising component and to build hype around a stock and get all that in. I mean, you could say that's kind of part of any CEO's mandate, but I take your point. I also think 5 to 6 years like that. That's not an out of the ordinary tenure running a company. If you're going to play devil's advocate in this instance and see that side of it, I think that's a relatively standard tenure for a business. But
why? So why is this like? Are there examples that come to mind and everything where you've seen a CEO depart during a fragile period of a single asset developer's life? Strandline. Yeah. And it's funny you mentioned that one because that was the one that came to mind because I know that you've got this rule that if you see it, you would sell your stock because it's information asymmetry in that instance.
Yeah.
But that time the CEO, he was an MD. He stepped off the board initially, remained, I think, CEO for a brief period of time,
for
and
a brief moment in time,
transitioned out of the company. But the moment you saw him step down in some capacity, you sold your shares.
And by all accounts, in that case, the perfect person to build the project got it done on budget throughout COVID, which was incredibly hard. But they had a whole host of different challenges that they were coming into, and this was mineral sands. It's not, run-of-the-mill gold mining. So that was cause for concern in that instance.
Yeah. Do you think there are parallels to Paladin, or do you think it's quite different?
I would say the alarm bell went off straight away again, and ramp up has been nowhere near as smooth as they wanted, and it never is. But I wouldn't say I'm well versed enough with the intricacies of their mining operation at Langheinrich to completely comment. But you want to be doing a lot of homework now if you're holding the stock, like a lot of homework. Not to mention what we spoke about last week in the context of how these guys are kind of valued given what they've got already and where uranium prices are currently. I think you're paying for a bit of upside, like we said there. So that would make me all the more cautious.
Yeah, and context matters as well, right? Like in the case of Paladin, like they are facing, I think it's 2 class action lawsuits. The class action lawsuits, the way they get funded is there's like this whole kind of litigation funding dynamic, but in effect, you wouldn't see the class action, at least the first one, get to where it is if the litigation funders hadn't already deduced there's a very good probability that this is gonna,
they want to get paid as well.
There's it's not quite like maybe it's a home run case, maybe it's not, but it's pretty, it's probably a very highly probable outcome that shareholders win in the class action.
At which point, quick as well, right?
Yeah, and at which point in time, like, is it inevitable that the CEO of the company at that point in time has to step down as a result of the optics, the pushback from proxy advisors, all that kind of stuff? Like, is it maybe preemptive in expectation of losing the class action too? It could be. Like, I don't know. That would be a better explanation if you own the stock than something relating to information asymmetry.
Yeah, that wouldn't be bad. That would.
And the stock went up. Okay. The stock went up. So I think the market thought, this is a good thing.
Exactly. Yeah.
Anyway.
It'd be that class action would be an interesting part of the business to follow and see where that kind of takes it.
Yeah. How about Predictive?
Mate, we've got a few question marks about Predictive. They came out with their DFS. So they obviously own the Bankan project in Guinea, of all places. And I think we're curious to ask a question. Is there much kind of meat left on the bone for investors at this stage? And what is the next chapter of this takeover saga that we saw start up with Perseus coming into the company and taking a stake sort of 2/3 of the way through last year?
Yep.
So,
yep.
Yeah, worth sharing a couple of the numbers to start.
What are the headline numbers that you saw in the study?
So 250,000 ounces per annum is the production guide for 12 years of mine life at an all-in sustaining cost of a bit over $1,000 an ounce. The reserve grade is close to 1.8 grams per tonne, but the underground is much closer to 4, and that will tie in with the mine plan, which we'll speak to in a second. NPV5 of 2.5 billion and an IRR of 46% using a 2,400 gold price. And the last detail I mentioned is that the CapEx is about $460 million there.
Big CapEx, but this is a quality mine when it's going. There's no doubt.
Yeah, exactly. So if we compare and contrast the PFS, which came out in early 2024 with the DFS, there's a few different details to highlight, and there's a bit of a difference in approach, and we'll sort of show on screen now what a bit of this looks like. So they're going for a smaller NEB pit, and that has seen the strip ratio reduce pretty significantly from 4.6 to 1 to 1.9 to 1. So it's a much smaller pit with steeper pit walls. But what they're going to do is they're going to attack the underground much earlier. They're going to go at it from the GBE pit, and they're going to start this whilst they are constructing the plant. So by the time the plant is good to go at sort of year 0, if you like, they've already developed out the decline to that higher grade part of the ore body, and that they can just be underground mining, contributing what they sort of call at least 25% of fresh ore from the beginning. So it's quite a different approach, and it'll make sense if you sort of look at the graphics that we're showing. But there's a few other differences in approach as well. They've gone for slightly smaller throughput. So instead of 5.5, they've gone for 4.5 million tonnes per annum. And they've also seen the grade increase. So that's gone from kind of close to 1.6 to 1.8. And the overall output is down 20,000 ounces per annum, but they're mining that at a more competitive cost. So ultimately, you see in the financials, the MPV up 140% from the PFS, which is a substantial lift. And as anyone listening to this would know, the gold price has been on a tear. So they have factored in a gold price that is $600 higher than what they'd assumed previously. So all that in the context of the capex staying pretty steady.
Those are certainly really tidy numbers. This is going to be like a phenomenal mine, and the visuals are awesome too. That really help you kind of contextualize it. And they changed the macro assumptions there, including the gold price. I just wish they had have changed the discount rate too, JD. Kudos. The same day that came out, Astral put out their own study on what's PFS, and like big props to them. They put a sensible 8% discount rate on a Goldfields kind of single asset gold project. It's that's much more reflective of what should be in these study numbers. I'm starting a petition, like and this Predictive's in Guinea, and the argument is, well, everyone else does it. You're going to get comped to everyone else, so you have to use NPV 5%. Not anymore, mate. Starting a petition. I don't care if you're in Goldfields or Guinea. NPV 8s. Let's just start with that.
Hard to argue with that. If you are going to get in the PDI camp versus Astral here to cause a bit of conflict, I think they're using a decently lower gold price assumption.
Yeah. You're right. You are 100% right on that front. I thought the Astral numbers were tidy as well.
Close to 100,000 ounces per annum operation.
Yeah, that's shaping up to be like a very financeable project. There's no doubt.
Yeah, 13 years of mining on a 19-year life, as they put it. It's an interesting one to follow, hey?
Yep. But refresh me on the latest kind of corporate stuff going on with Predictive. I mean, Perseus obviously picked up that stake from Capital Drilling. Now, then we saw Zijin and Lundin actually enter the cap structure.
Not montage. Yeah. So Perseus went and took a 14% stake mid-2024. Within a month or so, they stepped that up to almost 20%. At that point, everyone kind of thinks, they've got their foot on this. And they did it kind of interestingly because the stock had traded up to nearly 30 cents, dipped briefly, and they scooped up their stake at closer to 20 cents, and then it bounces right back up. So subsequently, in February of this year, we see Lundin and Zijin take a cumulative 10% stake. Now, they invested $69 million at 26.5 cents, and the stock just ripped pretty much. So this dilution took Perseus below 18%, and all of a sudden you've got a company that's capped closer to $1 billion as opposed to the whatever $600 or $700 million it had been prior. So it jumps up more than 30%, and it's traded at that elevated level since. So kind of between 35 and 45-ish cents for the last 6 months. That's the playing field set right there.
Competitive.
It is. And obviously, Jeff, who we had on the show around that time, he and the team at Perseus were less than impressed with how things had kind of played out. And more to the point, the valuation that the company was trading at and its attractiveness given the capex that then would need to be spent. So
I'm not sure he was unimpressed with how it played out. I think he was just trying to make a point on like valuation.
On valuation, yeah. So framing it as a kind of $1 billion plus maybe another 30% to take it out, plus 700 Aussie means you're $2 billion in the hole, and you need to make a lot of money and do a lot of mining to earn that back. So they're sitting on
you have to start assuming a gold price that's north of maybe your internal deck is, and is that a sensible or prudent thing to do?
Yeah, and what is the payback kind of period given the volatility in political stability in country as well? But Perseus now sit on a decent little paper profit that they can cash in should that time come. But that's how things kind of stand. And I think it's interesting to quickly actually have a chat about Guinea and understand where they're at, because they've been seeing a lot of changes, right?
What's changing?
So you'll remember just a couple of weeks ago, maybe 3-4 weeks ago now, we saw 120 to 150 tenements be pulled by the government. Now there was varying views. Predictive were swept up in this, so they had their Argo and Bokoro, which weren't really going to play a substantial role in this, but they got pulled off them essentially, and there was sort of question marks. So some people who operate in country said some of the revocation of permits was warranted. People hadn't held up their end of the bargain. Other people didn't agree with that so much. But if you look at what these guys have factored into the DFS, you've got 6% on royalties going out the door, you've got a 30% tax rate assumed, and you've got a 15% free carried interest. So they are yet to receive those final permits, but that's the distribution that they have factored into their modelling. And yeah, when you sort of comp it all out, that's on par with a lot of West Africa, and remains to be seen whether that gets the all clear, but that's sort of in line with the recent mining code.
So the $1 billion question is, who gets the chocolates at the end of all this?
An alternate party coming in and taking it out, as you know, is complicated given the big stakes we see there. But one interesting name to throw in the ring, just to talk about in general really, is Lundin Gold. They are now capped at 19 billion Aussie. They have run over 120% year to date. Now they got Newmont on the register with 32% of the business there.
You ever seen a valuation like that for a single asset operation? I don't know if I have.
I not seeing one that comes to mind.
There probably is, but someone tell us we're wrong. Rhodes Ridge.
Different beast.
Yeah.
They have executed really well in Ecuador, to put it simply. They're now sitting with US $450 million in net cash. They did $170 million in free cash in a quarter. They're paying dividends, and I think it's pretty marvelous execution given the tough jurisdiction. There were a lot of question marks when they went in there and started building Fruta del Norte, and they've done a great job.
Tremendous job. Took a long-term view. Like, we're on side with the government and are reaping the rewards of it.
Yeah, but they are still a $19 billion business with a single asset in Ecuador. And valuation aside, I'm super impressed, but I'm curious if they are looking. They've spoken very much about an exploration focus and capital returns, dividends and the like, that they're going to start paying out. And I guess I have more question marks about that stake sitting within the Lundin family, how they think about it. They sort of famously have 25 to 30% stakes in a lot of companies, and their MO has not been taking out companies at this stage. It's often been a lot earlier stage than this. So I don't know how they would think about it, and I'd be very curious to explore that. But
I don't think I think Lundin Gold would be the vehicle to embark in West Africa for the Lundins. So I imagine that might maintain a very kind of
its own thing,
South American focus.
I think you'd be right. I think it becomes a different beast, and they've got a host of vehicles as well as spinning up new ones.
Seeing the simultaneous placement from Lundin family and Zijin at the same time into Predictive, I think was probably more telling of the Lundin's like horse that they're backing from a company perspective on their West African gold endeavors, and that's Montage.
Yeah, and you've got the inside line to Zijin as well. So
that's the other curious thing, right? If you got both Lundin family and Zijin backing Montage, like normally you one of the things that kind of kills the competitive spirit in M&A in mining is the fact that no two Chinese parties ever bid against each other. There's just this implicit understanding that we're gonna, like, one of us will get it, but but both not going to get into a bidding war.
Yeah.
That kind of sucks. And now you've got the like removing the Lundins from the potential of a competitive bidding outcome as well, because they're on side with Zijin in this vehicle. Anyway,
maybe the Russians will come, not gold operate, but that would be an incredibly complex proposition given where we're at. But yeah, I mean, Zijin made a big splash buying AKM not too long ago. It was a big transaction. So we'll see what their approach is going forward. But yeah, I mean, I wonder, given the road ahead that Predictive has in wanting to start construction early next year, does a prospective buyer just let them start marching down that lonesome road and be there when they perhaps stumble or come into challenges? Do they get creative and provide some sort of financing to get their way in the door? Lots of different shapes and sizes that could take. But
key catalyst here is, and I think it's the end of this calendar year, that's when you've got the at the moment, if Perseus submitted a full change of control, they have to 50% share that upside with Capital Drilling, who they bought their stake off. By the end of the year, Capital Drilling is no longer entitled to that extra 50%. So Perseus would save money. But having said that, I do think that like Perseus will be sensible and not kind of pay overs, and they might actually be quite willing to sell their stake to Lundin and Zijin jointly, or more likely, in my opinion, Montage, because I just interpreted that as like a Montage stake more than anything.
Yeah.
Or throw this one out there: Montage and Perseus merger, then take over Predictive.
That'd really take the competitive tension out of the process, but it would be it'd be interesting. I mean, the big next step for Predictive is to get the exploitation permit. That comes through. They're on the cusp of having to sort financing and find their way to developing the asset. But yeah, a lot on the table. I'm aligned with your thinking on Perseus being conservative in approaching M&A. They've got a lot to spend. They've got to develop Nyanzaga as well. And yeah, I can't see them at this sort of valuation coming in, but we'll see what happens.
It's pretty tricky to be competitive versus like Chinese capital too, for the number of reasons we've already talked about, not least of which they take a strategic view as opposed to like having to back out an NPV using a rational gold price or anything like that. So
yeah,
it just could go that way. And that's okay. Perseus will make money. Predictive shareholders will make money. The Chinese will build a mine. Like happy days. But yeah.
Yeah.
I think the more important thing is just be sensible, like from a capital allocation perspective, when like in these times as a gold miner as well, because it's this is like a window. Everyone's making good money. Now all of a sudden, the valuations of the development opportunities have come up a lot, even in West Africa where they were not a lot like just 12 months ago. So that's going to be a big differentiator between the gold miners like in 12 months time versus now, is how they were thoughtful about accretive opportunities to use their capital right now when valuations are elevated.
Yeah, a lot of the Lundin family will be, very closely familiar with Redback in West Africa and the kind of absurd valuation they received in selling that out in the last bull market cycle. I mean, they did that a bit before. It sort of happened like 2010-ish time frame.
Is it the Mauritania one?
Tassira.
Yeah, Tassiast.
Tassiast, yeah.
Sold to Kinross?
Yes, sold to Kinross, and that was a $7.7 billion transaction. They all made a mozza.
The Lundins did?
Well, they were part of that vehicle.
Gotcha.
And
isn't that funny?
Because Kinross paid the price.
Kinross then had to, wasn't it Kinross that sold Fruta del Norte to Lundin Gold?
A bit later on.
Probably as a result of that bad transaction. Jeez, you can thank Kinross twice. I actually didn't know that.
Yeah, so it's interesting, and I'm completely with you there. Like, this is the time where you want to see these goldies just piling up cash. You don't want to see anyone blowing their brains out on M&A. Not that PDI shareholders will want to hear that, but you want to stay disciplined and fill up the bank account in the good times and deploy it in the bad times.
Wow.
Mate, we should mention a couple other stories just quickly. Astron and their JV partners, Energy Fuels, have received the approvals for what there's the working plan for construction and operations. So they have the Donald Rare Earth and Mineral Sands project in in the state of Victoria, which isn't known for handing out mining permits so easily. And yeah, they're off to get sort of financing sorted now and get their ducks in a row there. But
is that a final approval or is there still?
Yep, final approval, final major regulatory approval.
Right.
Yeah, stock rocketed up sort of 47% yesterday and another 10% today. So yeah, I'm really curious to see how that goes, and it's good in a way. There's been a more constructive outlook on the value add in regional towns there that a potential operation could play.
Isn't this kind of curious? The two permits in Victoria, they've been the first permits in bloody forever. Was that VHM's Gosgen and now this? Both those like mineral sands projects. Like Gosgen will argue they're a rare earth project too. But mate, how weird is that?
Strategic, mate. It's strategic.
So like the amount of like land you actually have to disturb on a mineral sands project is like vastly greater than you would a normal mine. But the Victorians somehow like are more comfortable with that than they are just allowing a normal mine. Anyway, don't understand Victorians.
It's an interesting one. And the last thing to mention, another quick story here, Wildcat, they have seen their market cap fall pretty dramatically to $190 million. They have $60 million in the bank. And this is not something you see every day. They're doing a buyback, $5 million worth. So backing themselves, backing the value that Tabba Tabba has. And
unusual circumstances. They're
unusual.
trying to say they're cheap. Yeah.
Yeah, they're signalling to the market and got a little bounce on the back of it.
They've still got plenty in the bank and they're on go slow mode right now, so they're not at risk of regretting using the cash for the buyback in the near term.
Yeah, it wouldn't look good if you had to do a raise at a lower price later on.
Yeah.
But a lot that they've backed themselves into this one, so we'll see what happens. Lithium prices at a real low ebb and doesn't seem to be changing, but maybe we'll see a couple cracks come through in the near-term future and we'll be off to the races again. A couple of partners to thank, mate. Thank you to Mineral Mining Services, Grounded, Sandvik Ground Support, K-Drill and Cross Boundary Energy.
Boodaroo.
Boodaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.